A very good morning to you, boys and girls, and all those from Surrey, who we seem to have a lot of today.
Good morning, Ryan, TGIF.
Morning, mate. You all right?
All good in the southwest.
Yeah, us down here in the southwest, down near the coast. Weather's not too hot at the moment, but that's the UK for you. Hopefully we get some sun for the weekend. Right, well, welcome to Friday. Been a fairly choppy week all round in markets and stuff, so we're just going to run through, as we usually do, just some of the data points and news that has been out overnight during the morning. Start with Japan. We had some CPI data from those guys over there. Quite a jump in some of the rates. So you can see there the core CPI jumping to 2.1% from 0.8% there. The headline itself was up to 2.5% from 1.2%. There's also an ex-food measure that a lot of people look at, and that jumped as well to plus 0.8% versus minus 0.7% prior year-on-year numbers.
Ryan, sorry to interrupt.
We're probably going to talk about this in a bit. I know Kay has got a few words on that, but we'll get into that once we've got the news flow out the way.
We can't see your screen.
Oh.
Just to know.
There we go.
You know.
How's about that?
Perfectamundo.
Yeah, that would help, wouldn't it? Okay, right. Well, let me go over that quickly again. Just those CPI numbers you can see there, pretty strong readings coming in from Japan. As I mentioned, Kay and myself will have a little talk over those in a moment. There was one headliner, and I can't actually find the story for it to see the context, but apparently Japanese banks bought the most JGBs since 2014. And as I say, I want to have a little look into that, see if I can find out what that was all about, see some context. But just one of those headlines that stuck out overnight. Kay, I don't know if you heard that one or got any more on it.
I have not seen that one yet.
Okay, so
I'm trying to look for it as you continue to speak. Maybe I can find it.
Yeah, no worries, mate. I had a look around the Nikkei, couldn't find it on the Nikkei, couldn't find it on Reuters, so don't know where that one's popped up from. It may be something, it may be nothing, but these sort of headlines sort of stand out in my mind when I look at them. We're going to shift over to the UK now. The top data point there, you can see it's not a big data point. It comes out middle of the night for some reason for a UK data point. The GfK consumer confidence that fell to a historic low since records began. That's the lowest since records began. I believe the prior number of minus 38 was pretty close to the lowest ever, so we're breaking records there. Again, this has been feeding into the press this morning on top of all the cost of living worries and everything like that, consumer confidence falling. It's not really affecting the pound this morning, but it's another negative vibe coming into the UK, the situation there. But conversely, later on this morning, we got some retail sales which beat expectations and came in reasonably solid. There's a couple of negative numbers in there on the year-on-year numbers. They weren't as bad as expected. As you can see there, year-on-year down 4.9 versus down 7.2 expected. Core sales down 6.1 versus down 8.4 expected. So bad numbers, although not as bad as expected. But there is a bit of a skew here because these are April numbers. And last April 2021 was the time that we came out of lockdown. Non-essential retail's opening, basically pubs opened, which is why we got a huge jump in retail sales back in that April period. Hence why numbers are down year on year, because that effect has come out the market or come out the data itself. Just having a quick look through. So there's not been anything else really from the UK. Boris seems to have been let off any more fines. So that political soap opera is going to die down for a couple of days until we get what's called the Sue Gray report, which has been an internal report into all the party activity. Let's call it that. That's due to come next week. Again, it's probably something that the press are going to jump all over. I'm not sure it's going to be much for the market to chew on, but we'll see if there's anything really inflammatory for that. German PPI, year-on-year number jumped there. Month on month higher than expected, not as high as last month, but the inflationary picture still remains there. These numbers aren't really going to drop significantly anytime soon. We may see some moderation, a bit of up and down over the months ahead, but inflation seemingly entrenched there. Over to China, and we got perhaps some disappointing, let's call it monetary policy news, financial news. The PBOC cut their main loan prime rate on the 5-year by 15 pips, but they left the 1-year unchanged. As we've been talking about recently, a lot of people are looking for China, the PBOC, to ease rates further to offset the negative impact from these additional lockdowns and the problems they've got over there. So a 15 pip cut on the 5-year and leaving the 1-year unchanged may be a little bit disappointing in the market's eyes, not as dovish as might be expected. That's been reflected in $1, which we'll look at when we go through the prices. Over to Europe next. Not really much out today. 2 or 3, I think maybe 3 ECB bods coming out, pretty much going over the same lines as all the rest of them, expecting QE to end early July and rates to start rising potentially in July. No one really saying anything different to what we've heard. So no real change in sentiment there. Nothing really for the market to get its teeth into, and we're just seeing the moves, just following everything else that's going on with risk and what's happening in stocks and so on and so forth. Very little data coming out today. Nothing from the US of note. Probably the main data point we've got is at 3 o'clock London time, 1400 GMT, the Eurozone consumer confidence number. This is actually my second favorite data point in the whole world, purely from the basis that I've only ever seen a positive number in this, I think, twice in its entire history. The Eurozone consumer, as far as this number is concerned, has always been a miserable sod, and that's unlikely to change this month. My first favorite data point is the ADP employment numbers from Canada. It's on here. We're not sure if it's really on here because it comes out whenever they like to drop it, but I've just noticed it's on the calendar
again today.
This one is a real doozy because it's wild. I mean, it can come out of a number, say down 300, and they'll revise the prior number by 500, 800, a million. It really is a bonkers number. So we watch it because it's funny more than anything economically or fundamentally important. We just watch it because it's a fun number to watch. So that's coming out. That's about it. We got some central bank speakers on the wires as well. They'll be dropping later on. But apart from that, pretty quiet in the US. No data from there. So we're going to be having a look at what we get from the markets and what they decide to do in the recent stock moves, and are they going to continue or not. Just have another look at some of the things going on, the expiries. The only one of real note today is in dollar CAD, 127.2030. We got just under 3 billion expiring there. We're not too far out of that at the moment, 127.80. We're well within the ballpark there. So just keep an eye on that. If we get down towards that area as the day progresses, as we get closer to the expiry time, which is 10 a.m. New York or 1500 UK time. If we get down there, we could just maybe see some price action mooching around it. And that's the way I look at these options, just a brief rundown, is that is it affecting the price compared to what everything else is doing? So, for example, let's say we drift down to 127.30 in dollar CAD, and we're hovering around that maybe an hour before the expiry. Suddenly we see dollar pairs jumping everywhere else, but dollar CAD isn't. That could be an indication that the option players are keeping the price close to the expiry as they do their last minute jumping around on that, which then can mean that we potentially get a trade if dollar's strong everywhere else but dollar CAD is doing nothing. It may be an opportunity to grab along, and that might play catch up after the expiry. that's one of the reasons I mainly look at these, just to see if it's affecting the prices and if it's causing any skews that may create a trading opportunity. So one to keep an eye on there. Let's have a quick jump over to the prices. Dollar yen, if you want a perfect technical picture, you won't get one more than that at the moment. 127, the low 127s we've been touting for a while to see if we're going to sit in this 131, 127 range. 127.02 I think was a low yesterday. As I say, they don't get much more perfect than that. I know loads of guys in the room were jumping on that. I started scaling in from 127.22, added at 05, and I've just had a chop of that position at 128.18. So for the moment, it's looking a big solid level, a decent push away from it at the moment. It reinforces our view that we're going to potentially see a decent range set up here in that 127, 131 zone. For now, what can we do from here? Well, it's all about the more minor levels, really. We did have that sort of 128, 129 middle zone. So we'll see if that perhaps comes back into play. Again, if we're going to get a move up, we may get a move up towards this 129.80 area again. And then we'll see if we get a push. If we do get up there, I'll potentially look into to get on the other side and maybe look towards shorts, maybe up in this 130.55 area, potentially higher if it goes 130.80. So from here, looking at the main range, as I said yesterday, when you get a lot of noise in the market, when prices are up and down, and there's no clear trend intraday, step back, pick your wider levels, sit and wait, give them a go. Sometimes they pay off, sometimes they don't, but you've probably got greater conviction and a better chance of a level holding when it's a bigger, stronger level than you have messing around in the middle. So I'm going to try and sit on this long as far as I can. I'll move my stops up behind it. I'm looking for a decent move back above this sort of 128.20 area. Not a big, huge technical level for me, but one of those potential pivot levels. We held it as resistance earlier on today. We've had a little attempt above it, not quite getting above it. If we do get a move above that 20 level and it becomes support, then I'm going to start bringing my stop up on my longs behind. And basically what I want to do in trades like this is just sit on them as long as possible, taking slices off along the way. I'll probably look at that 128, 50, 60 area to cut some more if we get up there. And as I say, bring the stop up behind. The trade now is risk-free, and that's the point I always want to get to. That's my main objective of any trade: get my risk to zero as fast as possible. And I've done that now, and no need to pay. I'll just see if we can ride it, and if I can ride it as high as we can, all the better. I know, Kay, you're in this one as well.
Yeah,
longs in here.
I bought it. I bought twice. Once at 127.17, cut a slice when it went up into the 40s. The first time, then bought it again when it was like 127.12, and yeah, I'm still riding pieces of those. Cut a few on the way up as well, around this zone here, 128.07. I'm also looking at 128.50-60 to offload more, or everything into the weekend. I don't know yet. It's undecided on that one, because as you say, we are like a bit going towards the mid-range. I think 129.10-15 should be a decent zone now to resist, which is bang in the middle of the range, but it's shaping up as being a decent level, that 129.10-15. So to come back on the inflation, if you want, shall I have a quick word about?
Yeah, go, mate.
Okay, so the inflation, the inflation jumped higher in Japan, but we have to know it's all imported inflation. The only really price hikes that are planned in Japan is one of the major soft drink producers, who is going to up prices by about, if I'm correct, about 5 or 6% come August or September. So really the price, the the price hikes are mostly imported. Wages in Japan are still very, very slow in rising. So the people are more saving than spending. Spending in Japan is still not taking off massively. We've also seen the trade balance go back negative. So that's another reason why the imported inflation is on the hike. And I found something on your JGB buying. There was a 10 and a 20 year this week, and apparently they have attracted a lot of interest. So that's been pushing yields lower a little bit. And also we know that Bank of Japan is capping the 10 years at 25 BPs. So that attracted a lot of interest. And as we have seen over the past couple of weeks, Japan has been selling quite a bit of foreign bonds, and that should be also the reason why they bought their local JGBs. It's like a rebalancing act more than anything else, I would say.
Cool, good stuff, mate. Good stuff. I've got what we have to look at when we're talking about things like CPI, and Kay's right that a lot of it that they're seeing in Japan is imported. The problem is when the imported stuff starts feeding through into these core numbers, because the core numbers are more domestically aligned, and that's the problem with inflation. You know, you can have headline inflation really high, but you can have core inflation really low. That's something the ECB used to point out a lot. You know, headline inflation might be running hot, but core was very low, because there's no feed through into the real economy. So things like energy price spikes and short-term shocks in markets like that cause short-term shocks in inflation. But it's when inflation becomes entrenched in the core numbers, irrespective of what the consumer's doing, prices may go up whether they're spending or not. So with regard to this data point, it was a sharp jump in the numbers, but you know, we're not going to get excited over one data point. We need to see if the trend becomes entrenched, because that's what the Bank of Japan is looking for. At the moment, they say inflation isn't a problem. It's all temporary, transitory, whatever you want to call it. But if these numbers continue and they start feeding into the more domestic levels of pricing, that's when the Bank of Japan are going to sit up. That's when potentially they may start to change their tone. And obviously for JPY, that's going to be a big change for markets there. So taking from the fundamental perspective, not going to get excited about 1 month's numbers, but next month becomes all the more important, and thus it grows as we watch the data. Let's have a look at euro dollar. So we're looking pretty healthy above the 105 level at the moment. It's been a bit wishy-washy of late. You know, it's a big number, a big level, but when you've got price action that's happening every day around it, it doesn't look like it's anything much. But what I look for is when a price has come through, spend a bit of time past the level, then it can become a bit more solid. But if you're intraday, you can have these type of moves where it's up above, down below, up above, a bit of indecision. So you look for whether it's making a decent move above, whether it's going to come down, test it and hold it. But as I say, we got that move above it. It's looking fairly robust. We had another little try at 106. A little mooch above, couldn't hold it. We're just holding below again now. This 106 up to this 106.30, 40 area is the main level to look at least in the short term. And these are still pretty short term levels if you look at the wider picture. But that is my marker for the top side. If we get a break above there, then potentially we're heading back up towards the 108 area. But in the meantime, what do we do from here? Do we bang our heads on the roof here and fall down to the floor here and sit in this little range again? Or is 105 going to become a bit more washed out and we're going to maybe build a wider range? Because really 100 pips for any sort of range is not really a lot. So we have the potential maybe to look at this 106, 103s range developing, and the 105 becomes washed out. But for now, it's one of the main levels. So keep an eye on it. I'm still long here. Only a small bit. I had to scratch the itch the other day, 104.29. I jumped in. So I'm still holding here. If we get another failure at 106, I'll probably take another bit off just to put some in the bank, and yank my stops up behind again and just see where it goes. Anything you want to add on that, Euro? Okay.
Not right now. I'm just really short term playing off that 106 short, but I'm 20 points lower. I'm buying already most of it back. So no, I think the 106, what is it there? 30-40 is going to be important.
Yeah.
If we break that, it's probably, as you say, going to go and have a look at 108. But I'm no, right here I'm void of really strong views.
Yeah. And as I say, if we look at the trend, this is only the course of the year. We're up at 115s. These levels are really pretty small at the moment. They're small steps. They're not really huge steps.
Oh yeah, they're completely
when you got
a range.
Yeah, you got like 115, which is a big, age-old technical level. That 115 is really all the way back. It's been a huge level, up and down. So we're still in the small moves mix, let's call it that. At the moment, as Kay says, your best bet is to pick your edges, pick your solid levels. If you want to have a little snipe on some of the levels, then take your points. They're pretty clear at the moment. Looking at the pound, again, we're not breaking these levels. 125, we highlighted it. We had the move up above it yesterday. Still a complete failure. Back down. Now it's resistance again. So until we get breaks of levels like these, you really got to be careful with longs, because you don't want to try a break trade yet, or you can do, but you've got to keep it tight, because if it does fail, you don't want to be losing a lot of money. So if I was looking at a break trade, I probably would have gone in somewhere like 15, 20, and I would have been stopped out in this move back below. So now, if you're going to be looking for shorts, be careful, because even though we've come back down, we're up, banging our head in it again, and I don't like a price knocking on the door too many times. The trend itself, just the intraday trend, looking a bit more bullish. So just sitting here, if I had to pick a side, I'd say we've got more chance of going up than going down right now. Who knows what that'll be in an hour's time, or when the US opens, or whatever. We could be all the way back down to 124 in a blink. But the price action is what the price action is. We can't get above 125. That's your marker. When you're trading, price is going to go one way or another, up or down. So if it can't go up, it's going to go down. But again, I think maybe potentially a break trade attempt, if you didn't try one on here, maybe a break trade attempt would be worth it here, at least a small one, maybe above this high here, so maybe 20, 25, something like that, because a quick move back up through 125 and then challenging this high may suggest that we're going to get a push up. Again, you wouldn't need to put the house on it, maybe a 30, 40 pip stop on it at most. Keep your trade size low and just see where it goes. If you did want to try shorts into this 125, again, you've got your marker. If you're above 120, 125, 20, 25, that's where you're potentially wrong. So again, a fairly tight trade. And if we get a push down, 124 is really going to be the number you're going to be looking at. Let's have a look at Aussie dollar.
Can I just add something while you were on the sterling? You were talking about the numbers this morning and the data coming out, but I've noticed something is that the April data, quite generally around the globe, are still relatively generous, but then this consumer confidence is a May number, and recall the New York Empire stuff. Yeah, and that was also a May data point, which came in weaker. I'm starting to get really interested in what's coming out regarding the May data across the globe, because they seem to weaken versus whatever happened before until April, right?
Yeah, and we had the Philly Fed out yesterday as well, which was another stinker.
Exactly.
That was the second manufacturing from the US in May.
Yeah.
That it didn't follow the empire into a negative number, but it dropped to like 2.6 or something.
Absolutely. So I think it's very interesting to have a look really at what's happening with the May data and then going into June, obviously. But
yeah,
it is possible that we are seeing a kind of a turn in the data.
yeah, definitely. I mean, that's what we've been looking for.
Mm-hmm.
We've been looking for this for the signs of whether the impact of rate hikes or just the economy in general is going to be affected. We're going to see a slowdown. I'm just thinking back to other number we got yesterday out the US. Existing home sales, that was lower as well. So then now we've had starts and permits lower, existing home sales lower. That's on top, as I mentioned earlier this week, a real collapse in the NBA that's been in a downward trend, a really steep downward trend since February, March. All these little signals, they just build up the fundamental picture. And as Kay says, May is going to be an interesting date. If we'll get the PMIs. I'm not sure if the PMIs start next week for May. So the global PMIs from market, if they start to flag problems in manufacturing and services, then there's going to be a lot of questions asked over whether central banks like the ECB will even start hiking, or how far they can actually hike. And the same will go for the Fed. Can they sustain 350 pip hikes, or is the data going to start saying, hang on a minute, you may have to slow down a bit here? And that's what we look at with the fundamentals. That's what drives the market. The market is trading 90% on what's expected from a central bank. And if the economic data comes out saying it's not going to be what the Fed are expecting, they're going to reprice it. And that's when you get moves lower in the dollar, changes in yields, stocks, so on and so forth. So it's all something that hopefully via the show we do here, you get a better idea for those that aren't really fundamentally based, how the fundamentals impact the prices you see on the screen and some of the moves you see on the screen and the bigger and wider trends. I'm going to flip over to Euro Sterling while we're on the quid. A bit of a sideways action here. I still remain long from lower down. Really want to see a break of this 85 handle, get another push up. But it really needs to clear this 85.30 area, and then we'll get a test on this big fib that I've probably bored you with enough times over the last few weeks. This big fib of the 92 drop up at 86. We had that fake, had that test, hold, then a little fake out. Got us all the way back down here. So until we see a decent shift here, it's maybe going to take the ECB being a bit more hawkish in their June meeting than the market thinks. That should give us a good nudge up in this pair. Conversely, it could be curtains if they're not as hawkish and we see a drop back down to the 83s, which if we do see that, I'll probably add to my core position because I still feel the ECB is going to be hiking and potentially more than the market expects. Or even that they expect. So I still think the wind is definitely blowing behind being long euro than short euro at the moment. And then, until that wind changes, I'm happy to sit that way in my trading. Where was I looking at before? Aussie dollar, I think. Let's bring it down a little bit. Let's go have a look at the 1 hour. So again, another bit of a pivot area here around this 70-60 area, up to 70s, maybe call it 80s, probably more of a zone than a single price level. Intraday over the last, or this week at least, we got potential double top here forming. That's going to set us a range between there and the big figure at 70, which, as I've just been talking about, the euro at 105, we had a bit of up and down around it, a bit of a wishy-washy level. Then we came away from it, made a high, came back down. The first point of resistance is into that 70 handle. So again, that's just an example of how when you move around what is potentially a big level, quite often it washes out as a level. It doesn't really look like much, but it's when you move away, come back to it, does it act up again or does it not? So potentially here we need to either break this double top or break this low here, and that will set the next direction. If we do, then we should get a move up to the 71s, and then we've got another one of these minor zones up here, sort of 30, 40, we call it. Another one of these, you know, axis support, axis resistance, S&R levels, I call them. That'll be the next zone to get through. Then we've got another minor one here up in towards the 70s, 80s, 71s. But in the meantime, it's not looking like a really strong bounce at the moment. It has obviously bounced quite strongly since last week, but then we've just sort of petered out a bit. Again, a lot of influence from China here, and what happens in stocks. It's a big influence in the Aussie dollar. So one to keep an eye on for markets there. Let's have a look. Oil markets.
It could get a little volatile in the Aussie this afternoon.
Oh yeah,
because we have elections over the weekend.
Tomorrow. Yeah, the election's tomorrow, so keep an eye on that.
Yeah, so be a bit careful if you see strange moves. It's just a few big boys managing their positions, in my opinion. So I don't think we'll see too much of a real directional move unless something happens to the dollar today.
Yeah, I'm not sure when we get the results whether they'll be late Sunday, sort of.
Maybe Anne from Australia can. Tomorrow night we should have results, says Anne. Thank you very much, Anne.
Okay, so tomorrow night would be our Saturday night, so that would be your Sunday. Is that correct, Anne? Just trying to get the time zone in. It's your Saturday. Okay, cool. Right, so we should then therefore get some results at least before market open Sunday, so we'll have a bit of time to plan. But as Kay says, if you're in Aussie positions and you're running them over the weekend, know your risk there. Maybe look to protect it if you can. There's nothing wrong with exiting a trade and re-entering on Monday if that's the way you see fit, but just something to keep an eye on. As I mentioned, in oil, really not doing an awful lot at the moment. So we're seeing CAD dipping a bit. We've gone through the 128. Is it on the oil bus or is it on this dollar move at the moment? I'm not really too sure. This could be a fairly significant break through 128. Also catching below those prior lows. So we could in fact get a move down to this area in the low 127s as the next move there. Whether we get another move up is really, I think, going to be based on what happens in the dollar more than the Canadian. We know where the Bank of Canada are. We had the CPI out. That was fairly decent. No worries there. But really, as I say, a lot of this is data.
Canadian data. Sorry to interrupt. Canadian data have held up quite well during the whole thing, where the rest seems to start to find tops or turning. Canadian data are looking fairly strong still.
Yeah, the only problem with the Canadian data is that a lot of it is lagging more than the others. Where you get April data for the US, you're still getting March data for Canada. So there tends to be a big lag in their data. So it's a bit, things like the PMIs are the ones you really only get a sense of the current situation. Jobs reports is the same. But yeah, it's, a lot of focus has been quite rightly on stocks. And again, potential for a decent double bottom down here, at least in the short term, could give us a shove up towards that 141 zone. I mean, that was an absolute belter picked out by Blake and the other guys in our trading room. Again, if you want a technical level, they don't come much better than that. So here we have a bottom here. Again, potential for a range to build between these lows and up towards this 41 level. I can't pick which way stocks are going at the moment. For me, there's still a lot of confusion. I still don't know what's going on. We've got the OPEX today, which is all the option expiries, roll-offs, and so on and so forth. I can't think of the times, Kay. What's the main times for this stuff? Is it there's one about 4 p.m. there?
Don't ask me, mate. I mean, I'm getting extremely confused with OPEX and futures expiry times. I've never actually known exactly what times they are. The only thing which I would like to add on the S&P is that, okay, we have a double bottom there, but it's also a pretty big level of prior price action. The 38.40.50 is really going to be a pretty big level. So we have 250 points in the S&P to play inside. To play inside, in my opinion, 38.5, 41, and see what happens if ever it breaks outside. Hello, are you still there? Ryan, have we lost you?
Hello, yep, no, I'm here.
Oh, okay.
Yeah, Jane's saying there the OPEX expires at the market close, but they can settle after hours. The long and short for what we need to worry about is we potentially got some increased volatility coming into markets as those contracts roll off and expire. So it could be a bit messy. If you're not sure what's going on, look for any moves that really take the prices out of sync with the general trends. You know, we know the trend in stocks and the S&P is down at the moment. If we get a big, huge, all of a sudden pop that can't be explained by any news or headlines or anything like that, you may want to think about a fade, because it's potentially that these expiries having an influence, traders squaring up, getting in, getting out of 1 month into another, so on and so forth. A bit like the big fixes, as I mentioned yesterday, the big FX fixes, quarter ends, month ends, that sort of thing. It can just jumble the markets up a little bit. Right, let's have a look at some of the questions. If anyone wants to got anything there. Gary, the double bottom S&P is also the border of the bear market territory, 20% down from the peak. I think on a daily closing basis, 38.50 becomes important because of that. Yeah, could be right, very much so. You know, we all know the state of the trend here. If we go back, you know, even this looks a small move compared to what we've done over the last few years. You know, the biggest move we got for many years was over the virus, obviously. But the trend is definitely down at the moment, and it's going to take something special probably to break it right now. But as you say, look at the levels, pick your levels. 138.50. If that's your line in the sand, you know what to do if you want to trade it. Let's have a look at some of the other questions.
I saw a question about silver. Can I quickly reply to that one?
Go ahead, mate.
Okay, so silver right now is trading on a bit of a small resistance here around 10.15. If that goes, we could have a pretty rapid move back up to 23 bucks. If by the end of the day it caps in this zone, we probably will range trade 21, 22 for a little while, and with 21.40s somewhere in the middle there. So longer term, I'm still a buyer, but I don't know with the situation of the global economy right now if silver is the better one of the two, silver and gold, which brings us over to Anne. And I'm a little bit long gold from yesterday, and I think this 30-40 zone was pretty important on gold. Fibonacci levels, 200-day moving average, trend line, you name it. It was all happening in the 1830s to 1840. So I think it's a little it's worth a play to go and have a look at 1870-75 for a starter, but it could be that gold is going back into a longer term channel, which could take us quite a bit higher, but I think a lot will depend on how the market reacts to central bank moves. But this gold move looks a little impulsive to me, and it's worth paying attention to this 1830-40 for a hold.
Yeah, good stuff, mate. I've been thinking, you know, how do metals or how do precious metals react if we do get into this stagflation situation?
Run
Because
higher,
it's
right?
it's often looked at as particularly gold as an inflation hedge, but it hasn't really done that. It hasn't really ripped on the inflation picture.
Because it has competition from the crypto world. Huh? That's what we've been seeing over the whole pandemic period. Is that we were all expecting gold to fly, so we took the move higher up into the 2000s, which was a really great break that we saw on gold during those days, and the measured move coming in around 2070 was an absolute beauty. But since then it's come off. But we also saw that during the gold rush, the cryptos were flying, and that held gold back from really ramping higher, in my opinion. So it has had competition from elsewhere, which makes those gold moves look a little small. But okay, in the global scheme of things, I still think it's going to be used as an stagflation hedge, and should move higher if that is what the market is going to trade into the summer or after.
So how would you explain the fact that since we've seen cryptos crumble, gold really hasn't done a lot?
Rebalancing. We have seen that a few times during the pandemic where they diverged. Like, just take for instance Bitcoin, because it's the most important one. But we have seen those rebalancing acts a few times during the pandemic period, where the one goes one way and the other one goes the other way. In my opinion, it has to do with risk and volatility profiles more than really the direction. I think the risk and volatility profile of a Bitcoin is and will be for quite a while much higher than gold. So if it's, call it the broader term, risk off, and I think Bitcoin would get affected more than gold, for instance.
Yeah, gotcha.
Yeah.
Okay, folks. Well, let's brief review of the week. It's been a very choppy week. There's been no real sense, in my opinion, of any sort of real direction in markets or prices. We're chopping around the central bank pictures at the moment, as you well know. We are seeing some of the US data starting to look a bit dubious. Let's call it that. That's something to keep an eye on over the weeks ahead as we roll in. The ECB edging towards their meeting. What they're going to do in June, that remains on the table. We pretty much know they're going to announce the end of QE starting early July, probably the 1st of July, something like that, or whatever the working day is, and then potentially set themselves up for a hike at their meeting 21st of July. So that's what we're looking at over the weeks ahead, and next week in particular, see if there's any changes to those themes and scenarios. But until then, thank you very much for coming to the Flow Show. Thank you for your questions and your input.
Ryan, can I say something? I saw a question about from MZ about dollar Chilean pesos, but sorry, but we are really not watching that at all. If anyone would be interested in the let's call it the emerging markets sphere, we are like really watching MEX, Rand, and China as the main currencies in the EM sphere. Really, anything like other South American currencies is a little out of our comfort zone.
Yeah, very much. Yeah, so as I was saying, yeah, please have a very good weekend, safe and peaceful weekend. Hope you've had a good trading week, and we'll do it all again on Monday. Thank you very much.
Thank you all. Have a great weekend. Thank you, Ryan.
Cheers, mate.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.